A very good morning, everyone. This is Banumathy, and this is the second session in management accounting. We have already done one session wherein we had an introduction to management accounting. And in this session, we are going to look at cost classification. Okay. So you are watching MEPL Classes, international courses. And here you're getting to access the demo videos of ACCA courses. Okay. All right. So today's session, I hope it's going to be very informative in aspects of learning about cost classifications, cost behavior, and various aspects relating to cost. Okay. Right. So if you like this video and if you like the channel, please click the like button, click on the subscribe button, and please share it with your friends and juniors as well. Okay. Thank you. And let's begin the session. So we are looking at cost classification today. Okay, so in the first session, if you remember, we had a good introduction to management accounting, wherein we understood costing or cost accounting is a major part of management accounting, right? Why is that the case? Because all management accounting information is, provided for the purpose of management decision making. And management makes decisions to maximize profits. And one of the ways of maximizing profits is by controlling cost. So in order to control cost, we need to understand cost. We need to understand how they are classified. We need to understand their nature, their behavior. We need to understand how do we, record them. So there are many aspects relating to cost that needs to be understood so that we can take control over cost. Okay. So if cost can be controlled, profits can be maximized. Okay. So for that reason, here we are understanding about cost. Okay. So this is a very simple topic. We are going to touch upon the fundamental aspects of costing. Okay. Right. So coming to cost. Now, when we talk about cost, we are referring to the various costs that we are incurring in order to produce a product or in order to run a particular function in an organization, okay? Or in order to run a particular machinery or department, okay? So it could be anything. We could cost a product or a department or a function or a machinery. We could cost anything. We could estimate the cost of any of these. Okay. So there are certain terminologies that we need to learn before, we look at the cost classifications. Okay. Some of them let's discuss now. Okay. So cost object. So cost object is one of the terms that we use in costing. So what is cost object? The object for which we are doing the costing. Okay, so if we are costing a pen, the pen becomes a cost object. Okay, so if we are costing a department or a unit of product, okay, that becomes a cost object. If we are costing a department, that becomes a cost object. So what is the item for which we are doing the costing? Okay, so the item is known as the cost object. Then comes cost unit. Okay, so what is the unit of item in relation to which we are determining the cost? Okay, so what is a unit of item in relation to which costs are determined? Okay, so if we're costing pens, if we're costing a pen, that pen becomes a cost object, and the unit in relation to which we'd be doing the costing is per unit of a pen. Okay, so in the case of hospitals, the unit would be per room. We'd be costing per room, or we would be costing per patient in a hospital. If it is a hotel, we'd be costing per room. Okay, so what is the unit of item in relation to which costs are determined? Okay. All right, then comes cost center. So cost center is a place around which costing is done. Okay, so a place where costs are getting collected. Okay, we can call it as cost center. So place where costs are getting collected is known as cost center. Okay, so usually in our topics, we would be taking a department or a function as a cost center. Okay, so if we are determining the cost of running production department, then the production department becomes a cost center. All the costs relating to the production department would be collected around it, and it will be totaled to know the cost of running production department. Okay, so cost center is a place where costs are getting collected, and that reflects the total cost of that particular center. Okay, so we've already come across revenue centers, cost centers, profit centers, and investment centers in the previous chapter, introduction. Okay, so likewise here again, okay, cost center means the same thing, and a cost center will have a responsible manager. The manager would be responsible for controlling the cost in that particular cost center. Okay, all right. Now, these are some of the basic terminologies that we need to be aware of. Okay, so we understand what is cost object, cost unit, and cost center. Now we can move on to the other aspects of costing. Okay, so next is cost cards. So what is this cost card? This is a card wherein cost per unit of a product or cost for a particular volume of activity, this can be shown. Okay, so this is also known as cost sheet. We can call it as cost sheet as well, cost card or cost sheet. So this contains the detailed cost items relating to cost elements relating to a particular product or a particular or for a particular volume of activity. So I'd say cost details relating to a particular product or a particular volume of activity is shown here. Okay. So now, if I create a cost card for 1 unit of a product, okay, 1 unit of product A, let's say. So what are the items that we can find in this cost card? We can get to know how much of direct material cost that we have incurred in relation to that 1 unit of a product. What is the direct labor cost in relation to 1 unit of a product? Similarly, what is the direct expense and how much is the overheads, variable overheads? How much is it in relation to 1 unit? What is the share of fixed overheads per unit of that product? Okay. So all these will be given clearly in the cost card. Okay. Similarly, we can create a cost card for a particular volume of activity. Now, when we say volume of activity, it is the budgeted volume of activity that we are, that we are forecasting to produce, that we are planning to produce. So if a company is planning to produce 1,000 units of product A, then it can create a cost card for 1,000 units of product A. Okay, right. So that's about cost card. So cost card is one of the important item or one of the important document used in costing. Okay. So far we have understood cost unit, cost object, cost center, and cost cards. Okay. Now let's take a look at an example cost card. So you see, this is a cost card for a handmade wooden train set. Okay. So this handmade wooden train set is produced with the help of cutting and assembly department and painting department as well. Okay. So one handmade train set, how much is it costing? This could be found by looking at this cost card. Okay. So here we have a lot many, cost items that are given, cost types that are given. So you see direct materials, direct labor, direct expenses, prime cost, variable production cost, total production cost. A lot of costs are given. It is given very clearly, and every cost is calculated in relation to 1 unit of this product, handmade wooden train. Okay. So if we look at direct materials, we have wood. This wood used per unit of handmade train set is 5 meters square, and per square meter costs $2.5. Okay. So the cost of wood used in 1 unit is $12.5. Similarly, paint, 0.1 liters of paint is used to produce 1 unit, and each liter costs $1.10. Accordingly, $1 would be the relevant cost. Similarly, if we look at direct labor, so here we have 2 departments, cutting and assembly department, and then painting department. In both the departments, we have laborers working. So in cutting and assembly department, laborers are spending 0.5 hours to produce every unit, to work on every unit, and each hour is being paid at $6. So accordingly, $3 would be the labor time in cutting and assembly department per unit. Okay. Similarly, we have direct expenses. This includes license fee, and license fee per unit of the product is $2. So we total all the direct cost and we get prime cost. Okay. To prime cost, we are adding the variable production overheads to know the total variable production cost. Okay. Because all the direct costs are variable in nature, if we add variable indirect cost to that, we would get the total of both direct and indirect variable cost. So we call it total variable production cost. Okay. Right. So under variable production overhead, we have the power for the power for electric source, that comes to about $0.5. Okay. Then to variable production cost, we are adding fixed production overheads to know the total production cost. Okay. So under fixed production overheads, we may have several items of cost. Okay. It could include the rent for factory, supervisor's salary, machine depreciation, many things. Okay, we take the total of all the fixed production overheads, and we are here in this particular example, the fixed production overheads are absorbed based on labor hours. Okay, we are sharing the fixed production overheads over the units produced based on labor hours. Okay, so this is one way of sharing the total fixed overhead to the units produced. Okay, so we need to allocate a share of fixed production overhead to every unit we produce. How do we allocate it? That is a separate topic. Okay, allocation and absorption of fixed overheads. But here, let's just understand that fixed overheads are allocated and absorbed into every unit cost based on labor hours. So accordingly, $10 per labor hour is the share of fixed overhead, okay, per labor hour, and every unit of product consumes 1.5 labor hours. Okay, 0.5 in the cutting and assembly department, and 1 hour in the painting department. So 1.5 labor hours in total. So this comes to $15 for of fixed production overhead per unit. So now that we've taken into account all the direct cost, variable production overhead, and fixed production overhead, we add it up and we get total production cost. So to total production cost, we can add any non-production overheads as well. When we talk about non-production cost, any cost relating to activities outside the factory. Okay, so administration, selling, and distribution expenses, these are all non-production overheads. So in this case, 20% of total production cost reflects the non-production overheads. Okay, so $8.2 is 20% of $41. So $8.2 is the share of non-production overheads per unit. We add non-production overheads to production overheads, we get total cost per unit, which is $49.2. Okay, so to the total cost, we can add profits, and then we can arrive at selling price. Okay, so when we add profits, there are two ways in which we can add profits. So we can add profits either based on cost as a percentage on cost, or we can determine the profit as a percentage on selling price. Okay, accordingly, our selling price would be a bit different. Okay, so if we are calculating cost as a percentage, if we are calculating profit as a percentage on cost, that is called markup. Okay. Profits as a percentage on cost. So that is known as markup. And we have another term which is margin. So here we calculate profit as a percentage on selling price. Okay. Now let's say we have the total cost per unit of handmade wooden train set. Okay. Now, let's say we set a 20% markup. Okay. So if 20% markup means we are going to take 20% on total cost as profit. Okay. So here total cost is $49.2. Okay. So 20% of it would be $9.84. Okay. So in that case, our selling price comes to 49.2 plus 9.84. Okay, cost plus profit gives us selling price. So $59.04 is our selling price. Okay. So this is the way we calculate selling price and profits if we adopt a markup method. Okay. Moving on to margin. So margin, here we calculate profit as a percentage on selling price. Now, let's take 10% margin. Okay. So 10% margin, this means 10% of on selling price is the profit. Okay. All right. Now, if 10% on selling price, okay, we do not have selling price details. Okay, let's forget this markup calculations. Now, we have only the total cost figure available. How do we calculate this profit? We have to apply 10% on selling price to arrive at profits. We do not have selling price details. Okay. So what do we do? Now, if 10% on selling price is profit, okay, what is cost? How much of percentage relates to cost? 90%. Okay, so cost should be 90% and 10% profit. So 100% would be the selling price. Okay, so in this case, we have cost, which is $49.2. This is 90%. Okay, so we can calculate profit now very easily. Okay, if $49.2 is 90%, okay, so what is 10%? That is our profits. Okay, so that comes to $5.47. Now the selling price can be easily computed. It is $49.2 of cost plus $5.47 of profits. Okay, so in this case, our selling price is slightly lesser than the selling price under markup method. Okay, so basically, in order to give clarity, let me add one more point as well. If we are talking about markup, we calculate profit as a percentage on cost. So cost is 100%. In this case, cost is 100%. And our profit, in this case, is 20% on cost. So our selling price is 120%. Okay, selling price includes cost and profit, so selling price is 120%. This is markup. Under margin, we have cost. Cost is 90%. Okay, profit is 10%. And selling price is 100%. Okay, so since under markup, profit is calculated as a percentage on cost, cost is considered to be 100%, and under margin, since profit is calculated as a percentage on selling price is kept as 100%. Okay, all right, so that's about markup and margin. So once we know the total cost per unit, we add profits either as a markup or as a margin to set the selling price. Okay. All right. So that's about the cost card. Now, I hope we are clear about cost cards. Moving on to cost classification. Okay. All right. So how do we classify cost? Now, we would be already, we would have studied various types of cost in our previous studies, in our schooling, right? So just the same thing, a recap of it, okay? So cost classification talks about the various ways of classifying cost. Now we know that, cost, we can classify them as direct cost and indirect cost. We can classify cost as, production costs and non-production costs. We can also classify costs as fixed cost and variable cost or semi-variable cost. Okay. So there are many ways of categorization of cost. Okay. So what are the various different ways of classifying cost? Okay. So we can classify them based on element. We can classify them based on nature, or we can classify them based on function, and we can classify them based on behavior. Okay. So if we are classifying cost into material cost, labor cost, expenses, then basically we are looking at the nature of the cost and then we are classifying it. Okay. So under this category, by looking at the element, if we classify cost, we would be classifying them as material, labor, or expenses, right? Let's say we are looking at the nature of cost and then classifying it, okay? So by nature, cost could be direct or indirect, okay? So when we talk about direct cost, all costs that could be directly traced back to the product, those are direct cost, okay? So can we separately identify an item of cost with the product? Okay, so that is direct cost. Indirect costs, we cannot directly trace it back to the unit produced, but these costs should be incurred in order to enable production to happen. Okay, so these are indirect costs. For example, if we take material cost, okay, direct material cost, we can easily determine how much of direct material has gone into making 1 unit of a product. Okay, this is directly traceable. Similarly, in the case of labor, we can determine how much of labor time has been spent on making 1 unit of a product. So that is also directly traceable. We can separately identify the labor cost associated with 1 unit of a product. So that's again a direct cost. Okay. But if we look at rent for the factory, okay, it is incurred as a common expense, okay, to produce the entire units of products. So can we separately identify what is the rental cost to make 1 unit of a product? No, we cannot separately identify. It is not directly traceable back to the product. Probably we can come up with a basis to share this total rent over the various units produced. Okay. So rent for the factory, supervisor's salary, and machine depreciation. So these are all indirect cost. Okay. All these costs just enable production to happen. They do not directly relate to a particular product, or they do not directly relate to the production of units of products. Okay. So by nature, cost could be direct or indirect. So indirect costs are usually referred to as overheads. Okay. So in the production department, we incur both direct cost and indirect production cost. Outside production departments, whatever cost we incur would be automatically be called as indirect only, because all cost incurred outside the production department just enable the business to function smoothly. So they are all indirect costs. They do not relate to the production of one unit of a product. Okay, they do not directly relate to the production of units of products. All right. Now, when we talk about material, labor, and expenses, here again, we can classify materials into direct material and indirect materials. Okay. So if we are looking at direct materials, these are materials that are used to make or create the units of products. Okay. Whereas indirect materials, they do not form part of the product. Okay. But rather they are used by the organization, for various other activities. For example, we have cleaning supplies. Those materials are used for cleaning the office premises. Okay. We have stationery that are used by the clerks in the office or by officers in the company. So those are all indirect materials. Okay. Then coming to labor. Labor also, the labor cost, we can classify it as direct and indirect. The laborers are working directly on the product. They're all direct laborers. So wages paid to them would be categorized as direct labor cost. And the other laborers, okay, who are not working on the product directly, rather they are assisting the production process, okay, or they are, probably working outside the production department, okay. For example, let's take maintenance cost, okay, the laborers working in the maintenance department, okay. So the wages paid to these laborers are indirect labor cost, okay. Laborers working in the selling department or distribution department, okay. So they are all indirect laborers. So similarly, we can classify expenses also as direct and indirect expenses. So direct expense, by direct expense, we mean the expense we are incurring, okay, directly in relation to the production of products. Okay, for example, if we are hiring a machinery and using that machinery, we are producing the products. The higher charges for that machinery would be a direct expense. Okay. So in the same way, we have indirect expenses as well. Indirect expenses are of many types. I mean, it could include many items. Okay. So direct expenses, this could be very insignificant. Okay, the per unit direct expense could be very insignificant, but indirect expenses could be a little more higher when compared to the amount of direct expense. Okay, depending on the business again, depending on the industry again. Okay, depending on the size of the business. Right. So we now understand what is direct and what is indirect cost. We also understand the various classifications of cost by element. Okay. Then moving on to function. So when we look at function in an organization, there are many functions. We have production function. We have sales function. we have distribution function, we have customer service. Okay, so we have administrative function. Okay, we have HR function. There are many functions that an organization can have, okay, depending on its needs. So if we are going to classify the various costs based on functions, and we call all the cost incurred in production department as, production cost, all cost incurred in sales department as selling cost, distribution cost, okay, customer service cost, administrative cost, okay. So this way of classifying cost is basically classification by function, okay. Then comes behavior. So under behavior, we can classify costs based on how they behave, okay. So how does cost behave? We take a particular cost. What is the possibility of it behaving in a certain way? Okay. We have to look at the various ways it could possibly behave. If we look at material cost, okay, how does it behave? With increase in the production, volume of production, the total material cost increases, okay. So basically, we incur $10 as material cost per unit. Then if we produce 10 units, it would be $100. If we produce 20 units, it would be $200. So this material cost is varying with the level of activity, with the volume of production. So it is a variable cost. If we look at rent for the factory, in the short term, if we look at short term, the factory rent is going to remain fixed no matter how many units we produce. Whether we produce 10 units or 20 units or 100 units, we are going to pay the same amount of rent. Okay. So rent is a fixed cost. This fixed cost could step up beyond a certain point. For example, if the factory capacity is only 10,000 units, we can produce only 10,000 units maximum using that factory. Then if the production plan is to produce, let's say, 13,000 units. So in this case, the organization would need additional space, additional factory space. So in this case, they'll have to, incur an additional rent. So till 10,000 units, rent remains fixed. Beyond 10,000 units, the rental expenses, okay, the factory rent steps up. Okay, it increases, and then from 10,000 to 20,000, it will remain fixed. Okay, so a cost could behave in different ways. So we can classify the cost as variable if they vary with the level of activity, or fixed if they remain fixed for a particular range of activity, or no, we could also have semi-variable cost. So what is semi-variable cost? If a cost contains a fixed element and a variable element, okay, there could be many examples for semi-variable cost. For example, let's take telephone bill, okay. So telephone bill consists of a fixed line rentals, okay. This is like a minimum minimum bill that we would be paying for telephone expenses, okay. Whether we use it or not, we'll have to pay that fixed line rentals. And then for every call, there is an additional charge, okay. So the fixed line rentals remains fixed, and the cost of calls, it increases with the number of calls being made, okay. So there is a fixed element and there is a variable element. Now, we can also have semi-variable cost, in salaries and wages, okay. So for example, let's say in salaries, employees are guaranteed a fixed salary per month, but they have based on their performance, they get to earn a variable pay as well. Okay. So sales executives, they get a fixed monthly salary, plus they get a variable pay based on number of sales orders generated. Okay. A number of orders of sales achieved, whatever it is. Okay. Production laborers could be paid a guaranteed wage that is fixed, and based on the number of units they produce, they could be provided a bonus, which is a variable pay. Okay. So semi-variable basically means it is a type of cost which includes a certain amount of fixed element and a certain amount of variable element. Fixed remains fixed, variable element of the cost varies with level of activity. The level of activity could be anything depending on the nature of cost. Okay. So that's about cost classification, right? So let's quickly look at some examples. Now, when we classify cost by element, we can classify them as materials, labor, and expenses. Now, when we talk about material, we not only just refer to raw materials, okay? This could include indirect materials as well, like cleaning materials, maintenance materials, stationery, components, okay? These are all, other materials that could come under this classification. Then labor, here again, we have direct and indirect laborers, okay? So all staff costs relating to employees on the payroll of the organization would be recorded under labor cost category. Expenses will include all other costs which are not materials and labor, okay? So rent, telephone, subcontractors cost, depreciation of equipment, anything and everything that cannot be classified as material and labor will become expense. Under expense, we can further classify them as direct and indirect. Okay. Right. Now, coming to classification by nature. So here we classify the cost as direct and indirect. Okay. So the total of all direct cost is known as prime cost. Okay. When we talk about prime cost, it is nothing but the total of all direct cost. Okay. So direct material, direct labor, and direct expenses put together gives us prime cost. All right. Now, if we add the indirect production cost to the prime cost, we get total production cost, that is also known as total factory cost. All the cost incurred in the factory, whether direct or indirect, okay? Doesn't matter. The total cost incurred in the factory is known as factory cost. That is nothing but the total production cost, okay? Right. So now we understand direct and indirect cost. Indirect costs are also known as overheads, okay? These overheads will be, shared over the units produced based on a fair basis or method. Okay, that those methods of absorption of overheads into unit cost we would be studying later in our syllabus. Okay. All right. So that's about cost classification by nature. Now coming to function. Broadly, we can classify the functions into production and non-production, and the non-production costs could be of many types. It could be selling and distribution administrative cost. It could be, customer service, anything, maintenance cost, anything, okay? Under production cost, we would include all cost incurred in the production department, both direct and indirect. Okay, variable as well as fixed. Okay, so as such, we include direct material, direct labor, direct expense, variable production overhead, fixed production overhead to calculate the total production cost. Okay. So in a construction company, our direct material cost, okay, could relate to the cost of bricks and cost of cements used in construction. If you look at direct labor, these will include the wages paid for the electricians, plasterers, construction workers, builders, okay. The direct expenses could include the cost of a subcontracted crane or driver, okay. They are directly involved in constructing the building, okay. Then comes variable production overheads. So here we could take the example of electricity, okay, consumed during the process of construction. Then fixed production overheads. This will be site manager's salary, okay. So now when we talk about electricity, here we are including only the electricity consumed for the purpose of construction of the building, okay. So there could be the construction company could have an office outside the construction site, okay, and there could be the administrative team sitting and working in the office. So electricity for the office, electricity bill for the office is not production cost, rather that would be administrative cost, general expenses, okay. But whatever electricity consumed in the production site, that would be a variable production cost, okay, right. So non-production cost, we have already seen non-production cost, okay. Now, this production cost is included in inventory valuation. We should know about this. So according to accounting standards, international accounting standards, all inventory should be valued at full production cost, okay. So as such, we will include all production cost in while costing for the products and the cost that we arrive at, okay. This cost will be used for inventory valuation as well, okay. These non-production costs, these are not included in valuation of inventory. We do not allocate a share of non-production cost into units produced, okay, into the cost of units produced, right. Now, when we look at administrative cost under non-production, it will be all the cost incurred in the administrative department, okay. The cost of, cartridges, ink cartridges for printers, the salaries paid to administrative staff, the stationery or, materials used, consumed by the administrative department, electricity, okay, whatever it is. Selling cost will include all costs associated with taking orders from customers and, marketing as well, okay. All initiatives taken by the company in order to market the product and sell the product in the market. All those will be selling cost. Coming to distribution cost, this is involved in distributing the finished goods to the end consumer, okay. This could include the delivery cost, the wages paid for the delivery personnel, and the cost of the warehouse storing the finished goods, or the cost or the fuel cost for the vehicles used for delivery. So all these are distribution cost. Then comes finance cost. So these costs are incurred in order to finance the organization. So if the organization is being financed via bank loan, then the interest on bank loan becomes the finance cost, okay. If the organization has issued debenture certificates, then the interest paid to debenture holders will become the finance cost, okay. So these are the various finance costs. So that's about classification by function. Now moving on to classification by behavior. We have variable cost, fixed cost, stepped fixed cost, and semi-variable cost. We've already looked at examples for each of this. So now in behavior, let's understand, pictorially or graphically how costs behave. Okay. So let's take a variable cost. Now, variable cost, if we look at the total variable cost, it increases. Okay. As the volume of activity increases, the total variable cost increases. Okay. So you see, we produce 1 unit of a product, we incur the variable cost associated with 1 unit, which could include direct material, direct labor, direct expenses, okay, and probably variable production overheads, okay. So let's keep this total variable cost per unit as $10. So we produce 1 unit, we incur $10. We produce 2 units, we incur $20. We produce 3 units, we incur $30. So the total variable cost keeps on increasing as the level of activity increases. So graph 1 depicts this behavior of variable cost. Okay. So graph 1 is basically depicting the behavior of total variable cost. So we have total variable cost on y-axis and level of activity on x-axis. The total variable cost is increasing as the level of activity increases. Okay. Hence, we are getting a straight line which is sloping upwards. And the slope is constant. You look at the slope, we look at the slope. Slope basically refers to the rate at which this straight line is sloping upwards. Okay. So what is the rate at which it is sloping upwards? If we are keeping $10 as variable cost per unit, then the straight line is sloping upwards at $10 per unit. Okay. So the slope remains constant. Okay. As the level of activity increases, total cost increases by $10 per unit. So that $10 is the slope which remains constant. Okay. So graph 2 illustrates this only. Cost per unit. We have cost per unit on y-axis and level of activity on x-axis. Irrespective of the level of activity, the volume of units produced, variable cost per unit remains the same. Okay. So it remains $10 only whether we produce 20 units, 30 units, 50 units, or 1,000 units. Okay. So these are the two graphs that depict the variable cost behavior. Now you see, we know material cost is variable. Okay. Now, when we purchase or procure materials from suppliers could offer bulk order discounts. Okay. Now, these bulk order discounts could be applied only for the additional units that we purchase beyond a certain level, or the supplier could offer the discount to all the units purchased. Okay. So, if the supplier is saying, okay, the price per unit of material is $10 and it remains $10 till 100 units. After 100 units, if for every additional unit, we are giving 10% discount, so you get to purchase the additional units at $9. Okay. So $10 is the material cost per unit up to 100 units. And over and above 100 units, we get 10% discount. That means every additional unit is going to cost us only $9. Okay. So if we want to depict this on a graph, this is how our graph would look like. You see, we have total material cost on y-axis and units purchased on x-axis. Now, when we look at the units purchased, okay, up to 10 units, the total material cost is $100. Then from 100 to 20 units, Okay. The increase is from $100 to $150 only. Okay. So basically 10 units is costing us $100. Okay. The additional 10 units over and above 10 is costing us only $50. That means there is a discount over and above the 10 unit limit. Okay. So we can calculate the discount. Zero to 10 units, total cost is 100. And then for the additional units, 11 to 20, the additional cost is only 50. Okay. So what is the per unit cost? So here, $100 for 10 units. So $10 is the per unit cost. And here, $150. Okay. But we cannot take 150 and divide it by 20 because the discount doesn't apply to all the units. The discount applies only to additional units. So what is the additional cost? 50. And what is the additional units purchased? How many number of additional units purchased? 10. So $5. So that means 50% discount applies here. Okay. The supplier is providing us 50% discount for every unit that we purchase over and above 10. Okay. So in this case, if we observe, the line is a bit steep initially up till 10 units, and then it's slightly slanting. From 10 to 20, it is a bit slanting comparatively. And then after 20, it's a bit more slanting. Okay. Meaning there is a further discount after 20 units. Okay. So there is a further discount offered by the supplier for beyond 20 units. Hence, we are getting a even more slanting line from this point. Okay. So this graph basically suggests that discounts are offered only to the extra units. Okay. Hence, the slope, if we calculate, would be different at different places of this line. So up to 10 units, the slope would be $10. Okay, from 10 to 20, the slope, the rate of increase would be $5, and it would be different post 20 units. Okay. Now, what if the supplier offers discount for all the units purchased? Okay, starting from the first unit. So in that case, the line would appear like this. Okay, the line depicting the cost would appear like this. Okay, it's a bit it's zigzag. Okay, it is, up till 10 units, the total cost is $100. But if we purchase 15 units or 20 units, we get 50% discount for all the units starting from the first unit. So the line comes back to the origin. Okay, in order to depict that, we are, pulling the line down, and then a new line starts. Okay, this line implies that, we are creating a new line, and the cost per unit is different because the discount applies to all the units starting from the first unit. So the new line would be this. Okay, we can extend it backwards. Okay, that would reflect the cost per unit when discounts apply to all the units beyond this 10 limit. Okay, if discount apply to all the units after, over and about 20 units, then the line is even more slanting. Okay, so we are pulling the line down and make it even more slanting. So we get a new line. Okay, this line again starts from the origin. Okay, so that's why we are having this depicted using this, bend. Okay, all right. So this is the graph which depicts the cost behavior when discount is offered by supplier to all the units purchased. Okay, all right. Now coming to fixed cost. So fixed cost, we know it behaves in a fixed way in the short term. Okay, it remains fixed or constant in the short term, but in the long term, fixed cost could increase. Okay, in the long term, depending on the level of activity, depending on the circumstances of the business, fixed cost will increase. Okay, so if we look at the short term, the total fixed cost remains fixed irrespective of the level of activity. Hence, graph 1 depicting the total fixed cost has a horizontal line. Okay, so y-axis denotes total fixed cost, x-axis denotes level of activity. Irrespective of the level of activity, we have the total fixed cost, which remains fixed. Okay. Then coming to graph 2, we have the fixed cost curve, which is sloping downwards. Why is it sloping downwards? Because this graph is not indicating total fixed cost, rather it is denoting the fixed cost per unit. Okay. So fixed cost per unit would slope downwards as the level of activity increases. Okay. For example, let's take rent. Okay, let's say factory rent is $1,000. Okay. So factory rent is $1,000. And the factory is producing 100 units. Okay, so what is the share of rent per unit? Rent per unit would be 1,000 upon 100. So $10 per unit is the rent. Let's say the rent remains 1,000, but the units produced just 200. Okay. So in this case, 1,000 upon 200 gives us $5 as rent per unit. So as the level of activity increases, the fixed cost per unit comes down, it decreases. Okay. So that's why we have a downward sloping curve indicating the fixed cost per unit. Okay. All right. So that's about fixed cost behavior. Now, moving on to stepped fixed cost. This denotes the behavior of fixed cost in the long run, okay, or the behavior of fixed cost with regard to the level of activity, okay. So fixed cost remains fixed until a particular level of activity, let's say 10,000 units. We want to produce over and about 10,000 units. We need to incur extra factory, extra factory rent. So it steps up. Let's say it increases from, the rent increases from 1,000 to 1,500. Okay. So beyond 10,000 units, the fixed cost increases to 1,500. And then it remains fixed till 20,000 units. At 20,000 units, it further increases to 2,000. Okay. So there is a step up in fixed cost from 1,500 to 2,000. And then till 30,000 units, it remains fixed at 2,000. Okay. So likewise, the fixed cost remains fixed for a particular range of activity. And then beyond a certain range, there is a step up or increase in the fixed cost. Okay. This applies to warehouse cost. Okay. When more space is required, more warehouse must be purchased or entered. It also applies to supervisors' wages. As the number of employees increases, more supervisors are required. Okay. So that's about stepped fixed cost. Then we have semi-variable cost. If we look at the graph of semi-variable cost, we observe that, the total semi-variable cost, the straight line depicting total semi-variable cost behavior, it is not starting from the origin. It's not starting from the origin, rather it starts somewhere in the y-axis. Okay. Why is that so? Because semi-variable cost contains an element of fixed cost. So whether we produce anything or not, we would be incurring that fixed cost. Let's take telephone bill. Whether we make calls or not, whether we use the telephone or not, okay, we have to pay the fixed line rentals. So even at zero level of activity, even at zero calls, there is a minimum spent with regard to this cost. Okay. So that is what is depicted by this line. Okay. At zero level of activity, there is a minimum cost that is spent. That is the fixed cost associated with this. And then, the rest of the line denotes the variable element of the cost. Okay. So the entire line, okay, at this point, since it's starting, the start denotes the fixed cost and the rest of the line denotes the variable cost, variable element. Okay. Now it fits the telephone bill. The level of activity would be the number of calls made. And, as the number of calls increases, the variable element in the total cost will increase. Okay. In the same way, if we try and depict the total semi-variable cost per unit, okay, we would get a downward sloping curve like this. Okay. So here, there is the total cost per unit slopes downwards because of the presence of fixed cost element. Okay. So fixed cost per unit comes down as the level of activity increases. The fixed cost per call, in the case of telephone bill, the fixed cost per call will decrease with an increase in the number of calls. Okay. The number of calls made increases, the share of fixed line rentals per call would decrease. But the variable cost per call will remain constant. Per call, if it's costing $0.5, it will cost $0.5 only. Okay, for every call, it remains fixed. Okay. So the cost per unit, the variable element remains fixed. The fixed element decreases as the level of activity increases. The total cost per unit will decrease as the level of activity increases. And the line is downward sloping. Okay. And the line ends a little, a little at the top. Okay. So it does not come near to the x-axis, rather it ends much above the x-axis, denoting the presence of fixed cost. Okay. So this dotted line indicates the fixed cost. All right. So because of the presence of fixed cost, we have this downward sloping line, which is not coming to below. Okay. So that's about semi-variable cost. All right. So now that we have understood various classifications of cost, we can now move ahead and try and understand certain practical aspects relating to it. Okay. So before that, I'd like to put a gentle reminder here to all of you. If you're watching and if you're liking the video, please press the like button and, subscribe to the MEPL International Courses channel and Mohit Agarwal channel. And please also do share it with your friends and juniors if you like the chat, if you like the videos and the channel. Okay. All right. So now we are going to move on to something called high-low method. So what is this high-low method? This is a method that we use to separate the fixed and variable element from a semi-variable cost. Okay. Now let's say we have semi-variable cost, electricity bill. There is a fixed payment and then there is a variable payment. Okay. So in this case, we need to know out of the total electricity cost, how much is fixed and how much is varying. And what is the need for us to know the split? The need is for planning purposes, we need the split. Okay. So if we're going to create a budget, only if we know how much is variable and how much is fixed, we can determine what would be the total semi-variable cost for a particular level of activity. Okay. So in order to create a budget or a plan, we need to know the split up of semi-variable cost. Okay. For that reason, we use high-low method. Okay. In this method, we are going to use the past set of data of the business in the past for different levels of activity. Okay. What were the respective semi-variable cost? So we take the data and we analyze it to arrive at the fixed element and variable element separately. Now let's take one example. So we have illustration 3. We have outputs and total cost for the respective output levels given. So at 200 units, the total cost is $7,000. At 300 units, it is 8,000. At 400 units, it's 9,000. Okay. So how do we, using this data, how do we find what is the fixed element, what is the variable element? Now, this total cost, if you see, when the units increase by 100, the total cost increases by 2,000, right? So this increase is completely attributable to variable cost only. Okay. Now, we observe that output is increasing by 100 units and cost is increasing by 2,000 units, sorry, $2,000. This entire $2,000 is basically the variable cost associated with the extra 100 units that's produced. Okay. Because fixed cost remains fixed irrespective of the level of activity. So the fixed cost in the 7,000 is not increasing. Okay, so whatever increase is basically the variable cost associated with the extra units produced. Okay. So for 100 units increase, variable cost increases by $2,000. So what is the variable cost per unit then? 2,000 is the total variable cost associated with 100 units. So every unit consumes $20 of variable cost. Okay. So this is going to remain fixed. This $20 variable cost per unit is going to remain fixed, right? Now we know the variable cost per unit. Okay. Can we determine the fixed cost per unit? Okay. So now, if we take, let's say 200 units and 7,000 is the total cost for 200 units. Okay. 200 units is the level of activity and total cost is 7,000. Okay. Now we know out of the total cost, total variable cost would be nothing but the variable cost associated with 200 units. Now we know the variable cost per unit is $20. So for 200 units, 200 into $20 gives 4,000. So if I deduct the variable cost from the total cost, I will be getting the total fixed cost. Okay. So let me put it variable and fixed. This is the total fixed cost. Okay. So total fixed cost is 3,000, variable cost is 4,000, which gives a total of $7,000 semi-variable cost. Okay. So this is the logic behind splitting the semi-variable cost. But under high-low method, we need to keep in mind that out of the given data, we will choose the highest cost relating to the highest level of activity, and we'll choose the cost relating to the lowest level of activity. Okay, while calculating the variable cost per unit. Okay, so when we calculate variable cost per unit, okay, we take the difference in cost between the highest and lowest level of activity and the difference in units at highest and lowest level. Okay, so this is the formula. So when we have multiple sets of data given, in order to stick to uniformity, we take the highest and lowest level of activity and the associated data to determine the variable cost per unit. Now, in this case, the lowest is 200 units and the highest level of activity is 400 units. So we take the difference in cost between 400 and 200 units. So 9,000 minus 7,000. Okay, which is 2,000. Okay, and difference in units. So 400 minus 200, it is 200 units. Okay, so the variable cost per unit is $10. So earlier there was a mistake. So here I considered for 100 units increase, I by mistake took $2,000 increase in variable cost, but actually $1,000 increase. Okay, so when we look at the units increasing by 100, the cost is increasing by 1,000 only, not by 2,000. Okay, so that way our variable cost is $10 per unit. Hence, the total variable cost here would come down to 2,000 and the total fixed cost is 5,000. Okay. All right. This 5,000 would remain fixed. Okay, irrespective of the level of activity. So we can calculate what is the fixed cost at 200 units, what is the fixed cost at 300 units, or at 400 units. It will remain 5,000 only. Okay. All right. So that's about the high-low method. We calculate the variable cost per unit by using the highest and lowest level of activity and the data associated with it. And once we know the variable cost per unit, we can apply it in the total cost formula. So the total cost consists of total variable cost plus total fixed cost. Hence, we know the total variable cost. We can deduct it from the total cost to know the total fixed cost. Okay. All right. Now, the same high-low method we can use, when the fixed cost is stepping up as well. Okay. So, what if this fixed cost steps up? Okay. During a particular period. Okay. So, let's take the next illustration, which contains stepped fixed cost. Now, an organization has the following total cost at 3 activity levels. We have 4,000 units, 6,000 units, 7,500 units. Total cost is $40,800 at 4,000 units. It is $50,000 at 6,000 units and $54,800 at 7,500 units. Okay. Now, the variable cost per unit is constant within this activity range, and there is a step up of 10% in the total fixed cost when the activity level exceeds 5,500 units. Okay. So what is the total cost at an activity level of 5,000 units? Okay. So we need to determine the total cost if the activity level is 5,000 units. Now we have enough information. We have the various activity levels and the corresponding cost associated with it. We also said that the variable cost per unit remains constant, but the fixed cost steps up when the activity level exceeds 5,500 units. Okay. Now, if we look at the activity level, we have 4,000 and then the next activity level is 6,000. Okay. So 5,500 is between 4,000 and 6,000. That means the total cost, the total fixed cost contained in 40,800 is different from the fixed cost contained in 50,000. Okay. The fixed cost contained in 50,000 has a 10% increase when compared to the previous fixed cost. Okay. So in this case, we would take the data, okay, two sets of data where the fixed cost is the same. Okay. So for 6,000, at 6,000 units and at 7,500 units, whatever is the fixed cost that we incur, that remains the same. So in this case, we would take these two activity levels in order to calculate the variable cost per unit. Okay. We need not necessarily stick to the highest and the lowest activity level when there is a step up in fixed cost. Okay. When there is a step up in fixed cost, we can still stick to highest and lowest activity level, but given that both highest and lowest activity level have the same amount of fixed cost in it. Okay. So in this case, 6,000 is the lowest, 7,500 is the highest. And, the total cost associated with it contains the same amount of fixed cost. Okay. So going by that logic, Highest is 7,500 units. Lowest is 6,000 units. And the cost, total cost at highest activity level is 54,800, and here it is 50,000. Okay. So let's take the difference. Difference in cost, 4,800. Difference in units is 1,500. So difference in cost upon difference in units will give us variable cost per unit, which is $3 per unit. Okay. So since we know the variable cost per unit, we can calculate the fixed cost, which is nothing but the total cost minus the total variable cost. Okay. So let's calculate the total variable cost at, let's say, 6,000 units. Okay. So here it would be 6,000 multiplied by $3 per unit, so $18,000. Okay. So total cost at 6,000 units is 50,000. Okay. So that means our fixed cost is 50,000 minus 18,000. So 32,000 is the total fixed cost. Okay. Now we know that this 32,000 is the fixed cost incurred beyond 5,500 units of activity level. Okay. So post 5,500 units, there is a 10% increase in the fixed cost. So that means this 32,000 contains a 10% increase. Compared to the original fixed cost. Okay. So if we want to know the original fixed cost, okay, we simply have to take, so if this 32,000 is nothing but 110% because it contains 10% increase. So what is 100%? Okay. Okay, so what is 100% we need to determine? So it comes to about $29,091. Okay. So now we know the amount of original fixed cost. Okay. So we can, now what is the question? The question is asking us to calculate the total cost at an activity level of 5,000 units. Okay. So at 5,000 units, what would be the total cost? Now we know at 5,000 units, our original fixed cost remains fixed. It doesn't have a step-up element in it. So we can calculate the variable cost at 5,000 units. Okay, $15,000 is the variable cost. So 44,091. Okay. All right. So I think I've made a mistake here somewhere. So at 6,000 units, we have a total cost of 50,000. So per unit cost is $3 only. And total cost minus total variable cost comes to 32,000. This contains 10% increase. All right, no problem. We can look at the answer. So the variable cost here is $3.2. So that is the problem. Okay, so this was rounded off to 3. So if we keep $3.2, we are getting the answer. Okay, so if it is $3.2, our total fixed cost is $30,800. Hence, our original fixed cost comes to $28,000, and our total cost at 5,000 units comes to $43,000. Okay, so 43,000 is the answer. If we look at the answer, again, we have to, link it to 3.2 here. Okay, 44,000 is the answer now. Okay, so option A is right. Okay, so there was a problem because the figure was rounded off to 3. Okay, now it's corrected. Variable cost is 3.2. Based on $3.2 as variable cost per unit, we are getting the answer. All right. So that's about the high-low method with step up in fixed cost. Okay. All right. So now, what are the advantages and limitations of high-low method? Here, we are using the past data in order to estimate the cost for any level of activity. For example, in this case, we have the past data using which we analyzed the cost into semi and variable element, and using that information, we are estimating the cost at 5,000 units. Okay. So if we are creating the budget for 5,000 units for the upcoming period, this is based on the past data. Okay. So hence we assume that past, whatever has happened in the past is going to continue in the future. Okay, but that need not be the case. Okay. So in the future, things could change because future is uncertain. It depends on many factors. And we also assume that cost is influenced by only one factor, which is volume of activity. But in reality, cost could be influenced by more than one variable. Okay. Apart from volume of activity, there could be other variables that could have an influence on cost. Okay. So bulk discounts offered by suppliers, it decreases the cost, not only just volume of activity, right? So we need to take into account all other factors as well. When we create a budget, we cannot just depend on information about one variable. We'll have to take into account the influence of other variables on the total cost. Okay. Then it assumes that activity levels are the only factor affecting cost. Then it uses only 2 values to predict future cost, and these results may be distorted because of random variations which may have occurred. Okay. Now, when we take a set of data, there could be variations in the data. The variations could be cyclical variation, or it could be seasonal variation, or it could be any random variation as well. Now, what is this variation? For example, if we take the data of monthly sales in 2022, we would have every month sales from Jan till December for the year 2022, right? Now, certain years will have the highest sales, certain months will have the highest sales, certain month will have the lowest sale, okay? And it need not necessarily have an increasing trend, or it need not have a set pattern, okay? The monthly sales could have any pattern, okay? Why? Because there could be variations over the months. The variations could be due to seasonal effects, okay? If it's a seasonal product, let's take umbrella. During rainy season, the sales revenue will be at its highest, okay? During summers also it may be high, okay? But other times of the year, it probably would be performing on performing an average sale. So we need to remove these seasonal effects from the data in order to know the true trend, true underlying trend. We need to remove the seasonal effects. Okay, there could be variations due to cyclical reasons. Okay, the cycles of the economy changes, the business cycle changes. So there is a economic cycle or business cycle that is ongoing, and that will have an impact on the business. For example, there will be times when economy is booming, and after boom there will be a recession. That is by default, because a boom will not remain forever. There has to be recession. If recession continues, it will be a depression. Then it cannot remain at a depressed state for a long term. Okay, it cannot remain at that state forever. So, there will be a recovery point there will be a recovery of economy or business from one point, and then the recovery, if it sustains, it will lead to boom. So this will affect the demand and supply in the economy. This will affect the performance of the business. Hence, the variations due to cyclical economic cycles or business cycles should also be, removed from the data in order to know the underlying trend. And there could be random variations. There could be decrease in sales on a particular in a particular set of months because of COVID, or because of some pandemic or war or whatever reasons. So these are random variations. So the past data is influenced by random variations, cyclical and seasonal variations. We need to remove that and then conduct the analysis in order to know the true underlying trend and the true cost. Okay, right. So these are the limitations of high-low method. The advantage of this method is that it is very simple to apply and easy to understand. Anyone can do it, right? All right. So that's about high-low method. Now the high-low method, basically, if you observe, we are, using the formula total cost is equal to fixed cost plus variable cost per unit. Okay, here we multiply by number of units in order to know the total cost of production. Okay. So this is basically in the form of a linear equation. Y is equal to A plus BX. Okay. So we can put this formula in this way. So Y is basically the dependent factor, dependent variable. X is the independent variable. Okay, the value of X is independent. We can put any value for the number of units, 10 units, 20 units, 30 units, 40 units, anything. Okay, Y is dependent. Y is cost. Cost is dependent on the volume of activity. As the volume of activity increases, cost will increase. The volume of activity decreases, cost will decrease, right? So Y is dependent on X. And what is A? A is intercept. Intercept meaning the value of y when x is 0, that is intercept. The point at which the straight line hits the y-axis when x is 0, that is intercept. Okay. And then we have b. B is nothing but the slope or the rate of change, or the rate at which the straight line is sloping upwards or downwards. Okay, that is slope. So it's also known as gradient. Okay. Now, if we apply it in the T is equal to FC plus VC formula, we relate this to this formula, we would be able to associate the various variables like this. Y will be the total cost, A will be the fixed cost, and B will be the variable cost per unit, and X will be the number of units. Okay. All right. So basically, the total cost can be, total cost can be depicted using the equation of a straight line. Okay, so hence this equation can also be called as cost equation. Okay, so cost equations are assumed to have a linear function, meaning it is assumed to take the shape of a straight line. Okay, so that's about it. Now, if we look at y is equal to 5,000 plus 10x, this means 5,000 is the fixed cost, $10 is the variable cost per unit. Okay, so 5,000. So, in the graph also on y-axis, 5,000 would be the intercept. If y-axis is the total cost, 5,000 is the intercept. Okay, and the rest of the line is sloping upwards, which denotes the total variable cost, and the slope would be $10. Okay, so that's about cost equation. Next, coming to cost codes. So having understood the various terminologies relating to cost, the various ways of classifying cost, the technique to split the variable cost and fixed cost from a semi-variable cost. Okay. And, we've understood cost behavior. So having understood all this, now we need to know how do we record cost. Okay, so in order to record cost and account for it, okay, in order to we need to identify cost with certain unique numbers or unique codes. Okay, so we cannot, unless we have a coding system, we cannot record, summarize, or use the cost data for any other analysis. Okay, so we should be able to associate every type of code, every type of cost with the unique code. Okay, so that is known as cost coding. It's very important to code cost to enable easiness in recording, analyzing, gathering cost. Okay. Now we can come up with any type of code for cost. Okay. Usually, when we design the cost code, there could be some generic codes and associated with some specific codes. Okay. For example, if we say, 07 is the code for machine group 7. Okay. And if we say 16 is the code for canteen. Okay. So these are some ways of associating the different cost units or cost centers and identifying it with a unique number. Okay. Now, we can have generic as well as specific codes. For example, if we say, if an expense for machine group 7 is for oil, then its code might be 07 followed by 23 to represent indirect material. Okay. So if oil is an indirect material, okay, and expense for oil is incurred in machine group 7, and the indirect materials are represented by the code 23, and machine group 7 is represented by 07. So 0723 would be the code that will denote the indirect expense of indirect materials in machine group 7. Now, if we want to still specify what type of indirect material, we can add two further codes, two further digits to represent oil. So if we say 072304, let's say, and 04 will represent oil. So this 04 is a specific code. Okay. So 07 is, 23 is general. 07 is also general. It includes all expenses under machine group 7. 23 represent all indirect material cost, but 04, 072304, the last two digits, 04 represent only oil. So that is a specific code. This is an example of a specific code. Okay. So using this, so we can come up with many types of coding system. There is no hard and fast rule as to how do we design the coding system for an organization or for business. But some common methods are, discussed here. So we can have a sequential code wherein we just, have a set of expenses and we have assigned sequential codes for it. For example, motor expenses could be 001, and then electricity could be 002, and then rent could be 003, depreciation could be 004. So just put all the expenses and assign sequential codes. That is a very simple method. The very basic type, it's of not much use to businesses because it's very difficult to analyze and classify, right? If we assign just sequential codes to the set of expenses, it's not of much use. Then we have block codes, but sequential codes can be incorporated when we design a code. Okay, cost code could include sequential codes as well. Okay, a particular design of cost code could include sequential code as well. Okay, we cannot completely ignore that and set aside sequential code as useless. It can be incorporated while designing cost codes. Then we have block codes. So in block codes, we assign codes for a particular block of items. So if you say expenses, we can indicate it by 0004 digits. So thereby there could be 9999 items of expenses that can be identified with a unique code when there is a 4-digit code for expense. Okay. So next, coming to revenue. So revenue is indicated by 1000. Okay. So 1000 indicates the revenue block. Here we could have 1100, 1200, 1300. Okay. 1999. Okay. So from 1000 till 1999, any code represents revenue only. So it's a revenue block. 1000 to 1999 is a revenue block. 2000 to 2999 represent non-current assets block. In the same way, we can assign a block of codes for different items. Okay. Then we have hierarchical code. So in hierarchical code, let's take if 1000 represents revenue. Okay. If 1000 represents revenue, we can say 1100 will represent revenue from US. 1200 represent revenue from Europe. Okay. 1,300 could represent revenue from Asia. Okay. So under 1,100, we can have, the rest of the 2 digits, okay, can represent revenue from a particular product. Okay, for example, we can say 1,101. This could represent revenue from US from product A. Okay, 1,102 could represent revenue from US from product B. Okay, so hence we have a hierarchy of codes. This is a hierarchical codes. Okay, so 1,000 represents revenue. Okay, the second digit in the code represents the geographical location. The last 2 digits in the code represent the type of product, okay, or the category of product. So this is a hierarchical code, right? Then comes significant digit code. So in significant digit code, it consists of certain digits which signify a feature of the item. Okay. For example, if we say 2010, here 10 could refer, if 2000 is the paper file dividers, 2010 could refer to, paper file dividers with 10 packs, okay, 10 pack of paper file dividers. Or, if I have to give another example for significant codes, if let's say 1,000 represent screws. Okay. Now, if we say 1,075, it could represent 75 mm screws. Okay. Screws of 75 mm size. Okay. And 1,050 could represent 50 mm screws. So the last 2 digits represent the size of the screw. So that is basically nothing but a feature of a screw, feature of the item. So the last 2 digits signifies a feature of the item or expense. So this is significant digit codes. Next, moving on to faceted code. This is again, hierarchical code is a type of faceted code. We have many facets under the code. Okay. So for example, first 2 digits could represent region, second 2 digits could represent department, third 2 digits could the rest of the digits in the code could represent expenses. Okay. So here, there are many facets to the code. Okay. Now, if we say, if the code is 02040245, okay, then it represents national insurance expense incurred in administration department for the region Asia. Okay. So there are 3 facets in this code. So this is faceted code. Okay. So that's about cost codes. There's one more type, which is mnemonic code. This is basically completely alphabetical. Okay, it's not of much use, but mnemonic codes can be incorporated while designing a cost code. Okay, but usually alphanumeric codes are not read, effectively by the systems. Okay, so we most often ignore alphanumeric codes because it confuses the processor, but we can have alphanumeric codes as well. Okay, so These are some of the alphabetical codes. NCA, if we say NCA, it could represent non-current asset. EXP could represent expenses. Okay, these are mnemonic codes. We use mnemonics to represent the type of item. Okay, so that's about cost codes. So now we've come to the end of the chapter. So cost classification. In cost classification, to summarize, we have understood cost terminologies, cost objects, cost units, cost centers, cost cards, and then we have looked at cost classification by nature, by element, by behavior, and by function. Okay. And then we understood high-low method of separating the fixed and variable element from semi-variable cost. Then we looked at cost coding. So these are the topics that we have understood in this particular session. Okay, I hope you were able to understand, and I hope this session was useful. So please do press the like button and subscribe to the channel, and please share it with your friends and juniors. You can access the various courses offered by MEPL from MEPL's website, www.meplclasses.com. So you can visit this website and access the various courses offered by the institute and get benefited out of it. Thank you all. Thanks for watching.